Futures have been positive all morning. You see the S&P 500 due for a gain about 30 points. That's about 0.4%. The Nasdaq is really leading the way up almost 200. And in fact, I believe it's been 8 straight Mondays for the Nasdaq that have been positive for what that's worth. Joining us now, Sylvia Jablonski, CEO and Chief Investment Officer of Defiance ETFs. Sylvia, good to see you this morning. I guess everyone kind of knows the basic setup where, you know, strong years tend to end strong. November tends to be overwhelmingly a positive month, and yet we still have this Mag 7 leadership. Is there any reason you're seeing out there to kind of overthink it and believe that maybe the odds might be defied this year?
Good morning, Mike. Great to see you today. I think that the market is holding up quite well. And to your point, November tends to be a good month. You know, we're coming into this up 17% or so. And when you get a year like that, you tend to see November and December picking up another 3 to 5% to end the year. And with consumer balance sheets strong, corporate balance sheets strong, earnings looking pretty good, you know, 80% beats more or less top and bottom line, single double digit or lower double digit growth on earnings. I think we have a good setup here for year end.
Yeah, you know, the last couple of years, toward the end of the year, everyone trying to formulate their strategies for the turn of the coming year. Last year felt like it was very popular to say, yeah, sure, it's been a really concentrated market, and maybe the most highly weighted stocks in the indexes are a little more expensive than the average one. So maybe go with the equal weighted version of the S&P 500. It seems like you're still involved, but maybe not taking as much concentration and valuation risk. Well, that's been wrong this year. I mean, you're down something like 8 percentage points in the equal weighted S&P versus the market cap weighted. So how do you think about that, whether it's a matter of just sticking with the winning strategies or looking for mean reversion somewhere?
Yeah, you know, I think it depends on how your portfolio is positioned, right? If you have a heavy exposure already to the Mag 7 and the, you know, or the $1 trillion winners here in the market, then I think it's reasonable to hold those positions. And when you add exposure, you know, diversification, whether it's something like an X Mag ETF or an equal weight product, it's not the worst idea to diversify your portfolio. But I think in the near term, there's so much focus and investment opportunity in everything that has to do with AI infrastructure, AI power spend. And that's really what you're getting from earnings now. And that's really where you're seeing dollars going. You know, this massive build out of CapEx spend is thought to be in the trillions by recent McKinsey report. Goldman came out and said, you know, 165% increase in energy and AI infrastructure is needed to support all of these build outs that we're hearing from the Mag 7 companies. So I think, you know, it's hard to give up on those names when the future is very much leaning towards AI and AI build out. But you have a second and third derivative that you can expand to there in some of the power and infrastructure names.
Yeah, and just to be clear, XMAG, of course, one of your funds. It's all stocks in the S&P besides the Mag 7. Now, you also have a lot of these thematic ETFs, right? So AI and power infrastructure, as you mentioned, as well as quantum, drone tech. Now, that's been some of the wildest, kind of most speculative and exciting parts of the market. Let's just put it that way. So, I mean, I know you're a beneficiary of the excitement in those areas, but how do you evaluate whether things are getting overdone in some of those?
Well, look, it depends on the play, right? So AIPO, which is an AI power play, that's a fairly new ETF, and it's gathered tens of millions of dollars overnight because I think investors are looking for what is the next NVIDIA? What is that next second, third derivative? You know, we're talking about CapEx going 100% to powering this and building out this infrastructure. And I think investors are seeing that as where the puck is going. That's happening right now. We heard it this morning, right? You have Google going out to raise debt for AI power and infrastructure. You had the Iris Energy deal come out this morning. You know, these things are very much happening and active. And so those are very tangible opportunities. Then I think that there are opportunities that are positioned for the future. So quantum computing is something that's going to play out in the next 5 to 10 years. And it's, you know, it's where AI was in its infancy, right? So that's a longer term hold. You have to expect that choppiness, that volatility. You have some of those smaller players in there, could be lucrative as quantum becomes more commercial. And, you know, to your point with the drone play, Jedi, that's just the future of warfare, right? It's changing. AI is changing the way that, you know, you receive information from targets. Drones are changing the way you have unmanned systems, things like this. It's really the future of military is AI, and that's playing out in that type of sector.